In the UK, the Bank of England Governor Andrew Bailey, he signaled there could be further pain to come for households as the Bank of England raised interest rates by 1/4 percentage point. Policymakers at the Bank of England increased rates to 4.25%, of course, on Thursday, a near 15-year high. 11th time rates have been raised in 15 months. Andrew Bailey also warned businesses to share the burden of inflation and not just pass on higher prices to customers, adding that inflation is coming down this year. The UK Institute of Directors has responded in a letter yesterday to the Prudential Regulation Authority's consultation on the implementation of the Basel 3.1 standards. The proposals relate to the method of calculating the value of risk-weighted assets held by regulated entities and to affect the amount of capital that the bank needs to hold. The IOD wants to see a well-capitalized sector with a robust and well-evidenced approach to risk that can provide members with value for money access to finance for investment and working capital purposes, as well as day-to-day business banking services. The UK retail sales data coming in this morning to 1.2% over the month in February, much better than the 0.2% expected. It was 0.9 in January. Core retail sales growth, which excludes the auto motor fuel sales, rose by 1.5% month on month, higher than the 0.1% expectations. It was 0.9% in the prior month. Annualized basis, 3.5% in February compared to 4.7 expectations, a contraction of 5.2 in January. Joining us to discuss further, Arise business analyst Bode Ososanmi. Good morning, Bode. Thanks so much for joining us. What do you make of the Europe-UK PMI figure for March? What are we learning?
Yeah, good morning. The data just came out this morning, and indeed, this is the last month in the quarter, and we saw the composite index for the Eurozone at 54.1. Manufacturing, however, was 47.1. One thing we are still saying is manufacturing in contraction territory for Germany, for France, for the EU, even for the UK. For Germany, it unexpectedly fell. That's manufacturing PMI to 44.4 in March from 46.3, well below forecasts of 47. This is the 9th straight month of falling factory activity and the deepest contraction since May 2020. It was also due to supply delivery times, which surged to a new record high. Order books also fell at a faster pace, and outstanding business reduced markedly. So it does look like manufacturing is still struggling somewhat. The same thing we had in the UK. Manufacturing PMI contracted to 48.0 in March, a negative surprise. And even services PMI in the UK comes down to 52.8 in March from 53.5 in February, also missing expectations of 53.0. Like you said, retail sales arrived at 1.2% over the month. Retail sales looked good, but that's an older metric. That's a February data. This PMI is really March. So although we just got data also suggesting UK consumer confidence improved in March on better than expected economic forecasts, but the outlook still looks somewhat uncertain. BOE, however, that's the Bank of England, they've said they no longer expect a technical recession in the UK this year. I think that GDP is now expected to increase slightly in the fourth quarter. Looking at the FTSE, it's down 1.89% as we speak.
The response of the IOD UK to the Basel 3 requirements, can you give us some more details on that?
Well, as you know, the higher the value of the risk-weighted assets under the way they do the computation, this means banks must put more capital to that asset category. And as you know, the IOD really have a lot of small and medium enterprise companies in their membership. And when you have higher capital ratios, it's a barrier to entry, especially for banks, which leaves consumers with less choice and could lead to result in higher fees. And they have two issues mainly. There used to be a so-called small and medium enterprises support factor that has now been abolished, and in the proposed regulation. And this support factor was introduced in 2014 to reduce the potential adverse impact of tighter capital requirements on lending to SMEs with turnover of less than 50 million euros. And they are saying that they shouldn't remove this SME support factor, as it means banks will need to put more capital aside to support SMEs. The other issue they've raised is that according to the new regulation, the way it works, they disagree with the proposal where lending to a business that is secured against a building, the building is given a higher risk rating than unsecured lending. What they're saying is that this regulation doesn't distinguish between personal buildings and commercial property and so on. But the bottom line is any amendment that requires more capital cushions, especially to the small and medium enterprise sector, which is the engine of growth, really disincentivizes credit expansion to that sector, and they want the government and the regulators to encourage more lending to this sector, especially if we are going to see better growth.
Is there any point in the UK's Bank of England, Bailey, appealing to businesses not to pass on higher prices to customers as rates hiked?
But in an interview today, Bailey said there's evidence of encouraging progress on inflation. That's good. And although he also said that companies should begin to reflect that fact that forecasts of inflation will fall, and that needs to be shown, understood clearly in their projections. And yes, there are anecdotal references to companies unnecessarily raising prices. He said he didn't have evidence that they're doing that. However, warning companies not to raise prices is neither here nor there. I think what you really need is better competition, lower barriers to entry, especially in some of these less elastic sectors. Food in particular, people will buy irrespective of whatever price you have to eat. So companies take advantage of that. Tesco chairman Don Allen, for example, says that they've seen examples where prices have been hiked unnecessarily by competitors. So my suggestion, of course, is the obvious, that you just get competition to be more effective. That means have more players, discourage these monopolies and mergers that harm competition, and strengthen the industry watchdogs and regulators so that we ensure that people don't take advantage. We also know that businesses are also using digitization and more efficient business models to improve on their profitability. Some of these gains can neutralize higher input costs, making it unnecessary to raise prices. But as you know, as long as businesses and executives are measured by profitability indicators, don't expect much to change in terms of passing prices to consumers.
Arise business analyst Bode Ososanmi. Bode, thanks so much for taking us through the headlines. We appreciate your insights as always.